Every year, roughly 2,000 new private jets enter the market, and within 5 years, a large percentage of their owners will have lost more money on that single asset than on almost anything else they own. Not because the jet broke, not because of some scandal, simply because they misunderstood what they were actually buying. Most people assume the private jet is the purchase. It isn't. The purchase is the entry fee into a financial commitment that runs for decades, and understanding that distinction is the difference between an owner who uses this asset intelligently and one who quietly bleeds money every single year without realizing where it's going. Start with the number that gets all the attention, the price tag. A light jet can be acquired for somewhere between $3 and $5 million. A midsize cabin, the kind favored by executives flying coast to coast, runs $10 to $20 million. Move up to a long-range heavy jet capable of non-stop transatlantic or trans-Pacific flights, and you're looking at $30 to $60 million, sometimes more, depending on cabin customization. For a high net worth buyer, that number rarely causes hesitation. What causes hesitation, if anyone bothers to run the full model, is everything that comes next. Because a private jet, unlike almost every other asset a wealthy individual might acquire, doesn't sit quietly and appreciate. It demands attention, and it demands cash every single month, whether it flies or not. Begin with the crew. Regulatory requirements mean most jets in this class need a minimum of 2 type-rated pilots, and larger cabins often require a flight attendant as well. These aren't contractors you call when needed. They're salaried professionals requiring ongoing training, recurrent certification, and compensation packages that, combined, can easily exceed $500,000 annually before a single flight has taken place. Then there's the hangar. A jet parked outside is a jet exposed to weather damage and accelerated wear. So serious owners store their aircraft indoors at airports where hangar space is priced like the premium real estate it is. Depending on location, this alone can represent a 6-figure annual line item. Fuel is next, and it's where the numbers start to feel abstract until you see them written out. A mid-sized jet burns roughly 200 to 300 gallons per flight hour. At current jet fuel pricing, that's several $1,000s for every hour spent in the air. Fly 40 hours a month for business, which is common for an active owner, and fuel costs alone can rival the annual salary of a senior employee. Maintenance is where the real financial discipline is tested. Private aircraft operate under mandatory inspection intervals, and certain components must be replaced on schedule regardless of their actual condition. Engine overhauls, when due, can cost more than most luxury cars. This is why sophisticated owners don't treat maintenance as an occasional expense. They treat it as a reserve fund, setting aside capital continuously so a 6-figure repair never arrives as a surprise. Insurance adds another layer entirely, scaling with the value of the aircraft and the experience level of the flight crew. For a serious jet, 6-figure annual premiums are the norm, not the exception. Add it together, and here is the number that changes how most investors think about this asset. The total annual cost of operating even a modest private jet can approach, and sometimes exceed, 10% of the aircraft's original purchase price every single year, indefinitely. On a $20 million jet, that's $2 million a year in pure operating costs before a single dollar of depreciation is even considered. And depreciation is where the story gets uncomfortable for anyone thinking of this as an investment rather than a tool. Private jets lose value quickly, often shedding a significant percentage of their worth in the first several years of ownership, a curve steeper than almost any other asset class. A high net worth portfolio typically holds. Buy new, fly it hard for 5 years, and the resale value gap alone can represent a multi-million-dollar loss, entirely separate from the operating costs already discussed. This is precisely why the smartest capital in this space stopped asking, should I buy a jet, and started asking a much more useful question. What is my actual cost per flight hour? And at what utilization does ownership outperform the alternative? The alternative, of course, is chartering, paying only for the hours flown with none of the fixed overhead of ownership. Industry analysis generally places the break-even point somewhere around 200 flight hours per year. Below that threshold, chartering wins on pure economics almost every time. Above it, the fixed costs of ownership begin to spread thin enough that owning starts to make sense. This single number explains why fractional ownership programs, the kind pioneered by companies like NetJets, have grown into a multi-billion-dollar industry built entirely around investors sophisticated enough to know the math. Instead of purchasing an entire aircraft, buyers acquire a fractional share, often as little as 1/16, in exchange for a guaranteed number of annual flight hours and access to a much larger fleet. It's the quiet reason many of the wealthiest individuals in the world, the ones you'd assume own their jets outright, actually own a slice of a shared program program instead. They're not buying a plane, they're buying flexibility without the depreciation curve of full ownership sitting on their balance sheet. There is one more variable serious investors weight heavily, and it's tax structure. In many jurisdictions, aircraft used predominantly for legitimate business purposes can qualify for accelerated depreciation treatment, allowing a portion of the purchase price to offset income in the years immediately following acquisition. This does not make the jet free. It does not erase the operating costs already discussed. But for an owner generating significant business income, it can meaningfully improve the after-tax economics of the decision, which is part of why jets are often structured as much around tax strategy as around convenience. Put every piece of this together and a clear picture emerges. The purchase price is almost irrelevant to the real decision. What matters is utilization, the discipline to track cost per flight hour honestly, the willingness to model depreciation rather than ignore it, and the structural choice between full ownership, fractional programs, and charter, each suited to a different flight hour profile. For an investor flying 200 hours a year or more, ownership, structured correctly, can be the more efficient choice. For nearly everyone below that threshold, the economics quietly favor chartering or a fractional share. No matter how comfortable the balance sheet, the private jet, in the end, isn't really a symbol of wealth. It's a test of financial discipline disguised as a luxury purchase, and the investors who treat it that way are the only ones who ever come out ahead.